Today, we will bust or confirm the September red market myth, and we will begin right now. It seems almost supernatural as September rolls around and red grips the market in an icy embrace that drains away our gains and evokes fear in the newer investors. Obviously, it is not something supernatural, but what keeps causing this September downturn in the market? Is it guaranteed? As we look at the initial red day this time around, are we fated to succumb to this spooky market trend? These are questions that we will investigate in this video, and before we are done, I have a feeling the answer will be much more psychological than supernatural. Before we call the Ghostbusters, let me know in the comments if you have any stock market superstitions. I'm nada myself on this one. As always, I am grateful to see you all here in the home of free financial content on YouTube. If you are new, please subscribe right now so you won't miss a single moment, and a huge thank you for that click. The very first thing we need to do is to figure out if the red September myth is real or not. To answer this question, I need some data. Now, thinking about how much data we need to crunch, it seems to me that going back to September of 2000 is quite far enough for a modern analysis. That gives us 22 Septembers to pull data from. The first thing I did was look at all of the return on investments for the S&P 500 for the month of September to see just how many of these red months we have. Surely, with the reputation of a red September, we should have a lot of red. Oh, look at that. We have 11 red Septembers out of 22. Wow, it is like we can flip a coin to see if a September is going to be red or not. But surely, the red Septembers have been really bad, right? Okay, the average over this range was negative 1.16%. So yeah, there we go. That's pretty bad. Over the 22 years of data that we do have, yes, there is an overall negative September ROI. But honestly, that is all due to a really bad September back in 2002, which saw an 11% September drop. Holy banana bread. Hold the presses though. What happened in 2002 that could have caused such a crash? Yep. It was the dot-com crash. When that bubble burst, it had ramifications that resulted in bigger than normal numbers. If we want to get rid of that abnormality, we can look at the numbers from 2005 until today. It is still negative, but not by very much. It comes in at a negative 0.05%. Once again, that sort of takes us back to a coin flip. But why does September strike fear in the hearts of investors? How can a coin flip create a myth? This is a myth that has been around a long time, and well before the modern 22-year sampling that I have done for this video. If you do go all the way back to 1950, the average September ROI for the S&P 500 is a little deeper at negative 0.5%. During this same period, the Dow Jones average is negative 0.8%. So there is an overall downtrend. However, it's really not as bad as everyone makes it sound. Could this actually be more of a self-fulfilling prophecy? The market is without doubt powered primarily by investor psychology. If we all believe that September is a bad month, that may very well influence how we handle our investments. If you think September is going to be bad, you may just dump some stocks in August to free up funds for those so-called September sales. This is kind of funny because when people sell a lot in August, it deflates the market and makes it harder for September to be as red as it could have been if we had left well enough alone. That sure does make you think. Our fear of a red September may have contributed to the negative 3.83% drop in the S&P 500 that we saw in August, though most of the credit still sits with another episode of When Powell Speaks. All right, that was lame, but I'll keep it in nonetheless. What is the final verdict on September? September has always been one of my favorite months, and when it comes to investing, it is also a good month. If trader psychology drives prices lower, fantastic. I am getting some good deals. If the market does not go red, that is great too, as more people get excited about stocks, and that is good for a financial YouTuber's views. The best thing you can do is not count on a myth, but pay attention to real-world events in, well, of course, September, and use them to guide your impressions of the market, opposed to a myth that has only occurred 50% of the time since 2000. The fun does not have to end here, because you can always watch my video on the FIRE movement that I have linked on the left, or you can check out the video on the right that YouTube thinks you will like. Your click will decide who is right, and I will see you in the next video.